Hi there, welcome to kneppyinvests. Quite exciting when I get to do a video on a company I haven't really looked at much in the past. It's definitely true for the company I'll be focusing on in this video, and that is Ansarada. Now, even though this company was formed in 2005, it's only been listed on the ASX for just under a year. Now, this company didn't go through the IPO process. In fact, there was a merger between this company and another company that was listed on the ASX called the Dockyard. I think their ticker code was TDY. It wasn't really a merger of equals because Ansarada was by far the bigger company. So in a way, this was a backdoor listing. I think Ansarada wanted to get onto the ASX, and this was the best way they can go through that process. And in fact, what Ansarada does would have helped themselves going through this process. You know, understand that when I talk about what this company actually does. So let's get into it and look at some facts in regards to this company. To understand what Ansarada does, I went straight to the website and I thought I'll let the company speak for themselves in describing what they do. And here it is, which can be found on their homepage. So modern deal and virtual data room technology, and I actually did have to look up what virtual data room is, and I'll talk about that in a second. Designed to make mergers and acquisitions, divestments, capital raisings, IPOs, and restructures as simple as possible. So maybe their merger with the Dockyard, they use themselves to make that process easier. So what is a virtual data room? So I did look this up. And it is a secure way to store documents that multiple people can access simultaneously. And it's very commonly used by businesses when they're going through that merging process. It's because you have two businesses who might be merging and you need people from both businesses to be able to access information or documents. Or potentially if two companies are working on the same project, you need a way for employees to be able to access documents securely. So that's what a virtual data room is, and Ansarada are definitely in that space. The code AND, markup for Ansarada, 130 million, which when you take into account they have about or over $20 million of cash, it does mean the enterprise value is just over $100 million, and that is quite attractive valuation for this company. This company is growing, maybe not exceptionally quick, but it is growing. And just that simple fact they have that cash on hand is attractive to me. Receipts to customers for the financial year 21, which we can find in their June quarter Appendix 4C, is at 38.2 million. And operational cash flow for the financial year, 4.5 million. But when we look at the quarter results, we see there the last two quarterly cash flows, operational cash flows coming into the business is above $2 million per quarter. And if they can continue that momentum going, this company is looking at having operational cash flow of greater than $10 million in a year. So, and when you take into account the enterprise value is only $100 million, that means this company is quite attractively priced at these sort of values. Price to sales, again, not too high, only 3.4. And this company is growing and operational cash flow positive, and it's not valued that highly. If you want more information on Ansarada, I do recommend going to the website as maybe the first source of information, or having a look at any presentations the company has released in the past year, or just go to some of their financial reports like the Appendix 4C they released on the 27th of July. Before we look at the June quarter results for Ansarada, I just want to go back to the March quarter to see how the company was traveling in that quarter, and then just look to see how the company was or did progress over the next 3 months. Receipts and customers for Ansarada in the March quarter, $9.8 million. And when we do look at the costs, and I want to look at or compare the costs for this quarter and then the June quarter, staff costs at $5.5 million and advertising and marketing at $796,000. And because the receipts and customers were higher for the quarter than the cost, this company was operational cash flow positive in the March quarter by $2.1 million. And it's very important to have a look at investing activities and financing activities. They did spend a little bit of money on intellectual property, but overall, they didn't burn through much cash in those two sort of activities. And that meant they did grow their cash during the quarter. So they did have free cash flow coming into the business. And they grew the cash on hand by $1.6 million and finished the quarter with $21.7 million of cash. And that is very important to have that amount of cash on hand because that gives management a bit of flexibility on what they do with that cash. And there are four main things management can do with cash that is generated in operations. They can give dividends back to the shareholders, share buyback, acquisitions, research and development, or any sort of growth initiatives. And more than likely, Ansarada won't give dividends out to the shareholders. In the long run, that's actually a good thing because dividends, in fact, suppress growth for a company. It also suppresses innovation. And the only sort of companies I like to give most of the money back that they generate in operations as dividends is those sort of companies that can't or will have difficulty growing in the future. And Ansarada is definitely not in that category. So more than likely, management will look for ways to grow the value of this company in the future. And having $21.7 million helps in their goals, or should help in their goals anyway. So let's have a look at the June quarter results to see how things have traveled over the next 3 months. As we move on to the June quarter results, we see this company is traveling well. In fact, receipts of customers have grown from just under 10 million to 11.1 million. And if we compare some of the costs in this quarter to the previous quarter, they haven't spent more money on staff costs. They have spent a little bit more money on advertising and marketing. Maybe I shouldn't say a little bit more because it's almost doubled from 800,000 to 1.5 million. And I don't mind that because that does show that the company's getting out there. They're advertising and marketing their products a little bit more. And that can be beneficial for the company in the long run if they're doing a good job of their advertising and marketing. More than likely they are doing that. But overall, this company has shown a bit of operating leverage here, which means receipts from customers have grown at a greater rate than the increase in costs. And that does mean the cash flow coming into their operations has increased from the March quarter. So it's gone from about 2 million to 2.6 million. And even though they are spending a little bit of money on intellectual property, I think in this quarter they spent $1 million on intellectual property, it still means they have grown cash in their business from 21.7 million to 22.6 million. And again, it comes back to that flexibility around what management do with their cash on hand. They can just let it sit there, or maybe they can do some acquisitions or spend a little bit more money on research and development, or any sort of growth initiatives they can come up with. And I do like that simple fact that they do have plenty of cash on hand. And that just means that there is that potential that this company can grow quite a bit in the future. Because Ansarada only merged with the Dockyard just under a year ago, we don't have much receipts history for this company. However, you could go back through some of their annual reports when they were a private company, if you can find them, just to see how the company was performing over the past 5 to 10 years, and then compare those receipts on an annual basis to what we're seeing on a quarterly basis here. But the 3 quarters we do have, receipts have been growing, and they've been growing quite well. Yet there will be some investors out there who want to see at least 4 or 5 years of financial history before they even think about investing in a company. I think this all comes back to the risk profile of individual investors. So those who want to see at least 4 or 5 years of history are risk-averse investors. They want some sort of a surety that the company is growing before they buy into it. And right now, they can't get that assuredness because you only have a small period of history here. I'm more of a risk taker, and I won't completely rule out taking a position in companies like Ansarada. They've only been on the ASX for 1 year, so we don't have a lot of history there. I am willing to take a basket approach to these sort of companies. So I will buy maybe 5 to 10 similar companies. And hopefully, what we've seen over the past 3 quarters, that can continue over the next 5 years. And if Ansarada can continue this momentum, can grow over the next 5 years, the valuation of this company will be significantly higher by 2026. And in 2026, that risk-averse investor will consider buying into Ansarada at that point in time if they can continue to grow, even though the valuation has increased by 5-fold. And that's why or how the share price of a company like Ansarada just keeps on climbing if they continually improve their financials year after year, because you have these different sort of investors who will buy into the company at different points in their timeline. As we look at the daily chart for Ansarada, going back to when they started trading as the merged entity in December 2020, not a lot was happening with the share price of Ansarada from that December time to mid-July of this year. In fact, the share price was going down a little bit, or say drifting down. But things have turned around from the middle of July. So over the past month, from when I'm doing this video on August the 10th, the share price has started or moved into an uptrend. The sentiment has shifted to positive, and we've seen the share price increase from $1.20 to a current share price of just above $1.60. And if we continue going up a little bit higher, we will see this share price of Ansarada at an all-time high, although that's only 8 months of trading history with this merged entity. But things are looking good for the share price of Ansarada, and things are looking good for the financial state of this company. So this is definitely a potential buy for me and maybe for you if you do your research and find this company could fit into your portfolio and your investing strategy. The next video I'm going to do in this series is going to be 4 videos together, or 4 companies together in the one video. And those 4 companies are NIH Holdings, Western African Resources, Datadot, and another company I can't quite remember right now. But look out for that video, and I'm going to have to do those sort of videos over the next few months to get through and complete my mission on doing a video on every single company that has achieved an operational cash flow positive quarter. If you are looking out for those videos which will concentrate on the one company, look out for videos on AI Media, Arctis, Alcidion, and Somnomed over the next week. And these are companies I want to focus a little bit more on because these are companies I think have some good potential in the next 5 years. That is all I have for this Appendix 4C June quarter video on Ansarada. If you have any questions about this company or any other company on the ASX, I'd love to hear your opinions, your thoughts, particularly if your opinions are different than mine. Maybe you think Ansarada is the worst company in the world and you'd like to express your reasoning behind that opinion. I'd love to hear it, particularly if there's any insight that I haven't thought about right now. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.